A very good afternoon, friends. I'm Sanjeev Singhal, Central Council Member, Chairman Auditing and Assurance Standard Board, and Chairman Sustainability Reporting Standard Board. I, on my behalf and on behalf of my Vice Chairman, CA Vishal Doshi ji in absentia, welcome you to the 75th program of the Auditing and Assurance Standard Board for this council year. Today's topic is SA 250, which is consideration of other laws and regulations. And friends, I'm happy to share with you that so far 92,000 members have attended the programs of the Auditing Standard Board in this council year. Friends, we have taken various initiatives, including launching an expert panel. So this time we have launched two expert panels. One we did for bank audit till 15th of April. And since 16th of April, we launched our expert panel for the corporate sector audits and the audits of the non-corporate sector. The members can ask query relating to the auditing matters to our experts, and we have engaged 50 experts. If the matter relates to auditing, I would like to re-emphasize auditing and not accounting, because we are dealing with the Auditing and Assurance Standard Board. Then our endeavor is to revert within 24 hours to 48 hours. And this service is complimentary for all the members of the Institute of Chartered Accountants of India who are required to issue such an audit report. Please do avail this facility and improve the audit quality. Friends, this helpline is open till September, and our mission is to improve audit quality. And in this endeavor, your suggestions, your inputs are welcome. And friends, I'm very happy to introduce today's speaker, CA Milan Modi ji, who is an All India rank holder, intermediate 38 rank and final 36 rank, and is in practice since last 25 years. Friends, I have the great honor and privilege to introduce the keynote speaker for the day. My president in the council, when I entered into the council, he was my president, none other than CA Prafulla Chatterjee. Sir was a president in 2019-20 and the vice president in 2018-19. He's the chairman of Executive Committee of World Congress of Accountants 2022 and is the vice president of CAPA, Confederation of Asian and Pacific Accountants. We have prepared a two-pager profile for him, but he has requested us not to go through the entire profile. And actually, sir needs no introduction. A very pleasing personality, very witty and very knowledgeable, and you know, his management of people skill are the best. The way he has groomed us in the first year in the council will go with us throughout our life. Sir, I'm very grateful to you for your time-to-time guidance and for taking out time to be a keynote speaker. Sir, as you know, the topic for the day is consideration of laws and regulations in the audit of financial statement, and also popularly known as no-CLAR. And there's a worldwide emphasis on making no-CLAR mandatory in the auditing standard, and we are also amending our standard SA 250 and further enlarging it. The focus of G20 is also on no-CLAR, and this year India will get the presidency of G20, so this topic assumes more importance. Sir, I request for your valuable guidance for our members on this topic. Thank you, and over to you.
Thank you very much, respected chairman of the AASB, my dear friend, a very hardworking personality, Central Council member, CA Sanjeev Singhal ji. And let me tell you, friends, you know, for entire 3 years, I had the privilege and, you know, the good time we are dealing with Sanjeev Bhai, because that particular time, even though that was his first term to the council, but the various things and various initiatives that will be beneficial for the membership at large, he will always come out with some new idea. And let me tell you, today he's handling multiple roles at the ICI. He's the chair of the AASB also, he's the chair of the sustainability board also. And this sustainability entire concept, if I can, you know, mark one person who is responsible for bringing that to the profession, is none other than my dear friend Sanjeev Singhal. Because those days, 3 years before, 4 years before, you know, the sustainability was not that popular the way it is today. And he will always bring something to the council or to the president, ki, sir, we want to do and all those things. I'm really happy in the world, before even the IFAC or the, you know, now the IFRS Foundation, they could take the lead. it was we at ICI under leadership of Sanjeev Bhai was formed that sustainability standards board. It's not only restricted to that level, but to looking into the various opportunity that may come to the profession. He at that time also started the process of having our own sustainability standards. He's working also closely with the SEBI, and also very soon we will be having for the first time in the country the social stock exchanges and many other things that will come. So is that kind of person who will bring lot of things to the profession. So I am really happy when he said I had to come. I could not say no, because he's one person, as I said, really contributing for the profession. Friends, of course, we have Mr. Modi, who is the distinguished faculty, who would be talking in detail about this particular topic. But let me tell you, traditionally, even as a chartered accountant, many of us, whether you are in industry or you are in practice, the tax and audit used to be in our blood kind of thing. So audit, over a period of time, due to the expectations of the various stakeholders, including the government, lot of international framework which is coming to the country, the entire auditing also is, we are witnessing a lot of change. And I'm really happy to say that Indian accountancy profession, that is the Institute of Chartered Accountants of India, is on at par with the global accounting standards, auditing standards, and also the ethical standards. And many times it is the first Indian which is giving that roadmap to the world of in terms of implementation. Today's topic is about SA 250, and as Sanjeev Bhai was mentioning, it is like a no-CLAR regime which is coming. Last year, when I was in the council, I was also chairing the ethical standard board. And again, ethical standard board will also be now talking about the no CLAR. Soon ICI also will take that particular decision about its applicability, the guidance to the members. And therefore, this today's webinar, I think really, really important, friends, because it is, as I was talking, it is no longer that you go and audit in a different manner. Now international things are coming, expectation is increasing. And today's SA 250 also deals with, various other requirement of compliance, ensuring compliance to the other laws. And also again, there are twofold responsibilities. There is certain things even given to the management side, and certain things which as an auditor you are supposed to go. Of course, as I said, we have the distinguished faculty. I will not be going into the topic, but when even you see the overview of this particular SA 250, you will understand what kind of even responsibility and what kind of things that one is supposed to look into those particular things. And especially when it comes to the auditing, there are as an auditor, there are two types of category 1 and 2, which will have financial impact. Then what should be your road to ensuring that you are getting substantial evidence, and there could be non-financial impact, how you should be dealing with. So once again I congratulate AASB. And very again, when I came and Sanjeev Bhai was talking to me before we went live, this is the 75th program for this council year. So you can understand it is just 6 months. And Sanjeev Bhai is also, like Azadi Ka Amrit Mahotsav. He's, I think, giving guidance to the government. Okay, you took 75 years. I will take 7 months to complete this 75th program. And I'm quite sure by the time of this end of council term, the number will be minimum double, 150. Secondly, again, being now as the member of the ICI, because I'm no longer the council member, I was really happy that they are really concerned about, because everybody cannot be having that kind of resources within the firm. Because even today also, if you see the profile of the Indian chartered accountancy firms, most of them are the sole proprietor or maybe a 2-partner, 3-partner kind of firm. And especially again, when they are dealing with this complex situation, auditing expectations of the stakeholders, they really need the guidance. And as which Sanjeev Bhai has mentioned, they are running a continuous helpline for the profession whenever they have any query. And I think details will be available on the ICI website and the website of the AASB. I urge all my dear friends, the chartered accountants, please take that guidance from the AASB whenever you are in doubt. Because once you sign the financial statement or once you do the audit, you cannot go back and change those particular things. So whenever in doubt, ICI is always there, and especially this AASB, which is running this helpline, will be immense of help. So with this, once again, I must congratulate. Of course, he's being a dear friend. So I am stopping myself. Otherwise, people should not feel I'm talking and praising more to him. But this is his work which I had seen, and especially on sustainability. I think Sanjeev bhai, you should have one program of AASB and sustainability both together. Sure. So because again, those sustainability standards also their implementation, how it will have impact while you are doing auditing. So they are running so many programs there also, but maybe a common program of both the committees, just to give the vision. If they may not be relevant today, but after 3 years, what you see while dealing with the sustainability standards or the expectations of the government and various stakeholders on sustainability side, how my profession on the auditing side should equip. So I think that is my one request to you, Sanjeev bhai. And once again, congratulations to Sanjeev bhai, Vishal Doshi in absentia, also Mr. Lal and the entire team at the AASB who has been coordinating these 75 programs. It is not that easy. Somebody will feel it is just technological thing, but we have to getting also people like Mr. Modi who is here. They are also sparing their valuable time for the cause of the profession, because everybody today in the world, everybody is really busy. So this entire ecosystem under leadership of Sanjeev bhai, supported by the president, vice president, and with the help of the council, they are doing a lot. And we as the member, we also keep on expecting many more things with you from Sanjeev bhai. Thank you once again for inviting me here. And back to you, sir.
Thank you very much, sir. As I said, sir, your on the spot, your spontaneous reaction when you linked it with the Azadi Ka Amrit Mahotsav in yes, today is the 75th program and we are celebrating Azadi Ka Amrit Mahotsav. And the way you link AASB with sustainability, very right, sir. In fact, I would also like to apprise the audience that sir has recently attended the certificate course on BRSR, business responsibility and sustainability reporting. That shows his urge to acquire knowledge. And sir, it is not 3 years down the line. Right from this year, the audit of BRSR for large companies may start. So it's not 3 years. Actually, it's a matter of few months only. So we take your suggestion and, within next 15, 20 days, we'll organize a combined session of AASB and Sustainability Board. Thank you so much, sir, for your guidance as always. And now I request our esteemed speaker, Milind Bhai Modi ji, who has been contributing extensively to ICI as a technical reviewer of the annual reports, of ICI as an author, as a contributor to WIRC referential manual for last 4 years, and many other feather in his cap for his deliberation on the topic. Over to you, Milind Bhai.
Thank you, Sanjeev sir, and thank you, Praful sir, for this introduction as well as a brief background. And yes, I think the SA 250, it has been there since 2009, 1st April 2009, it has been there, but it has again got traction in the last few years. There has been 2 instances where there has been a deferral of the no-clar clauses in the Code of Ethics. And that's where a lot of attention has been drawn, both of people who are in practice and members who are in industry. And what we will try to cover today is that what does this standard do? What does it talk about? What are the guidance which it provides to the members who are in practice? And then we will briefly touch upon the other guidances which are available by the institute and the interplay between that and SA 250. We will try to cover some case studies. We will try to cover something which has been covered in terms of non-compliance by QRB. We will try to cover something which NAFRA has observed. And in the last, there are few case studies also which we can look at. So with this brief background, I will start sharing my presentation. And yes, is it visible? Can I start?
Yes, sir.
Yeah. So as I said, this standard has been there since 2009, so it's not new, but a lot of attention is there in terms of the responsibility of the auditor in terms of non-compliance with other laws and regulations. What we are going to cover today is the overview and gist of this standard, the correlation or the interplay which I spoke about of the standard on auditing 250 with other standards and other guidance notes which are issued by the institute, the non-compliances which are observed by NAFRA and the QRB, some case studies, and in the end, some conclusion or some takeaway for all of us. So as I said, there has been a change in mindset. You know, the board of directors, the audit committee, the independent directors, they all are looking at compliance levels which are at the highest, and they are comfortable continuing with the position as independent directors only if the management is proactive in terms of ensuring compliance as well as rectifying wherever non-compliances are observed. A lot of foreign investment or internal investments are flowing into companies, and when the investment happens, there is a due diligence process which is before the investment, and at that point of time any investor or potential investor would like to ensure that they are entering into a fully compliant company, and if the compliances are not up to the mark, they would seek the alternative in terms of reps and warranties from promoters or other alternatives. The overall awareness, vigilance, and the regulatory actions which are there for non-compliances is at a higher level as compared to the past. And obviously, there are industry and external consultants who also help in terms of ensuring these compliances. There are a lot of such softwares which are now available, both for legal compliance and governance framework, and that also a lot of large companies have adopted these softwares so that they are able to ensure and give the comfort to the stakeholders that there is a proper process and system in place to ensure the legal compliances. Incidentally, the SA250 does not distinguish between whether it is a small company or whether it is a large company. It does not distinguish between whether it is a listed company or an unlisted company. It does not distinguish whether it is a startup or an MSME. It just provides the guidelines that what an auditor needs to do, or how does the auditor need to respond when it observes certain non-compliances, and what are the steps which it should do before the non-compliances are observed. So how do they identify those items? Coming to the overview of the standard, as I said, it applies to the audit of financial statements. It applies not only to the amounts which are reflected in the financial statements, but also to the disclosure in the financial statements. So you cannot say that this is a disclosure or a note related item and hence it does not apply. It applies holistically to the financial statement. The standard has defined the term non-compliance. We will go through that definition also. One of the section within this standard is the management responsibility, and there is another section on the auditor's responsibility. We will go through some of the points which are there in that management and auditor's responsibility. It talks about audit procedure when non-compliance is identified or suspected. We will go through them in detail, and then what reporting should be done or what are the reporting requirements. So with this background, let's move to the next slide. So the first point is the definition of non-compliance, and the non-compliance, I just like to read from the standard itself. It's an act of omission or commission by the entity, either intentionally or unintentionally. So it's an act of omission or commission. It could be either intentional or unintentional, which are contrary to the prevailing laws or regulations. So contrary to the prevailing laws and regulations. Such an act includes transactions entered into by or in the name of the entity or on behalf of those charged with governance, management, or employees. So if you see the definition, it talks about the various things, which is act of omission and commission, either intentional or unintentional, and contrary to the prevailing law and regulations. Just to give you a few examples of such cases, let's say you find that certain GST is not paid while you are doing the audit. So non-payment of GST on reverse charge mechanism is not there. So that's another law. You are doing audit under the Companies Act, and these are the other non-compliances which you have observed. Schedule 3 disclosures are not given. This has a direct impact because Schedule 3 becomes a part of the Companies Act itself, and you see that certain disclosures which are mandated by the schedule has not been provided. Let's take a third example, that there is delay in filing FCGPR, which is a FEMA related matter. FCGPR is a form which has to be filed when there is an inward or infusion of capital in the company by a foreign party. So the definition of non-compliance is there, which is a broad definition, obviously, but you will have to go into more details. What is excluded from non-compliance is any personal misconduct, which by those charged with governance, management, or employees of the entity. So if it is on a personal front and not a business related, then those are excluded from the definition of non-compliance. What is the management responsibility when it comes to compliance with law? They should have a monitoring mechanism in place. They should ensure that there are standard operating procedures which are designed to ensure the compliance and identify non-compliances. They should have prevention and detection of non-compliances. So they should have proper steps in place. For example, they may have a legal or a corporate department or a cell within the company. There are compliance officers which are there. There are compliance officers which are mandated under certain laws. So this all helps in preventing as well as detecting any non-compliances and rectifying them. The management should also be responsible for development, implementation, and review of the internal controls surrounding statutory compliances. So that should be there in place. They should develop, publicize, and follow a code of conduct to the employees, as well as give proper training and awareness to the staff about the code of conduct. This is again one of the important areas which has taken significance, which is what can be done and what cannot be done from an ethics perspective, and a proper training and awareness and dissemination of those code of conduct items to the stakeholders. They also need to initiate internal audit team, form audit committees, and engage legal advisors so that the compliance with law, if there are interpretation issues within law, you have to seek legal advice and ensure that the company is compliant not only in the word but the spirit of the law. So this is as far as management responsibility is concerned. Coming to the next section, which is on the auditor's responsibility. Auditor's responsibility is broken up into 5 parts here: basic responsibility, specific responsibility, indicators for non-compliance. In case any non-compliance is identified or suspected, what is the auditor supposed to do? And the reporting responsibility. We will try to cover the 4 items which are after the basic responsibility a little bit more in detail. So what is the specific responsibility? Yeah, the specific responsibility is first to understand the various acts which are applicable to the company, and then look at which will have a direct impact on the material amounts and disclosures in the financial statements. And those items which have a direct impact, obtain sufficient and appropriate audit evidence to ensure compliance. You also need to take a written representation from all the clients that all instances of non-compliance have been disclosed with you as auditors. So then there are certain laws which may not have a direct impact on the financial statements, but compliance of which may be fundamental to operating aspects of the business. So there you perform a limited procedure to ensure that the controls and the management method of ensuring controls are adequate. And there, if you identify any instances of non-compliance, you will have to address those non-compliances, which we will come to in the subsequent slide. So basically, what this slide says, or what the standard says, is that there are some items which have a direct impact and some which do not have a direct impact. And where there is a direct impact, you need to do sufficient and appropriate audit evidence. In other cases, you may do a limited procedure to look at the peripheral controls which the management has designed and see whether those controls are effectively functioning or not. This is one slide which I picked up from the standard itself, there is an explanatory material which is there to the standard, and paragraph A13 of the explanatory material talks about few indicators which the auditor should be aware about. So if there are unauthorized or improper recording of transactions, payment of foreign exchange without proper supportings, investigation by the government department, prices which are exorbitantly high or low, payment of fines and penalties, litigation matters against the entity, extraordinary transactions with related party, and unusual payments toward legal and retention fees. So what it is saying is, which we have already been doing as auditors. When we look at audit, we also look at legal and professional fees to see that our contingent liability is properly covered, whether all the legal cases which the client has shared with us, whether it matches with the legal fees which has been paid or not, or is there a legal fee paid for a matter which is not disclosed in the list of legal or litigation matters. So, we have our methodology already in place to check some of these items, but I felt that let's reproduce this particular section so that we are aware. We look at fines, penalties, legal and professional fees, and any unusual or extraordinary items which may trigger more detailed investigation. So audit procedure which should be followed in case any non-compliance is identified. What is the auditor supposed to do once it identifies that there is some non-compliance? He has to obtain a proper understanding of the act, because it's not necessary that an auditor is aware and has a very strong understanding of all the acts which are applicable to the entity. So he may have to spend a little more time in terms of researching and understanding that act. Circumstances in which it has occurred. So what is the actual action or inaction which the company has done which has led to a non-compliance? Evaluate the possible effect of this non-compliance on the financial statements. Discuss with those who are charged with governance, as well as the process owner and the management. Try to understand their perspective of how it went undetected from their perspective. And wherever it is a tricky matter or an interpretation issue, you may have to seek a legal advice, because that's where the next slide comes into picture, that it's possible that it's a gray area. As an auditor, you feel this is the way it should be done, and the management feels that what they have done is sufficient compliance with law. And if there is a difference of view or an unreconciled matter, you may have to go to another person who is an expert on this subject and then take their view as regards whether the non-compliance which you felt as an auditor, is it just procedural in nature, or does it have any further implication as far as the financials is concerned? So, if you look at the earlier slide and this slide, this basically sums up what the auditor should do. And in all practical situations, I feel that there will be some explanation which the management will provide, unless it's a pure oversight. If it's a pure oversight, then what will be required is that how do you ratify or rectify that non-compliance? Is there a late fee? Is there a compounding? Is there any other option under the law where suo moto the company can go and plead for condonation of that particular act and accordingly take it forward? Next section is on the reporting responsibility of the auditor. So this has been broken up into 3 distinct sections. One is those charged with the governance, which is left-hand side. On the middle, we have the audit report, which is to the shareholders, mainly to the shareholders and the other stakeholders, and which is generally in a public domain. And third is to the regulators. So the auditor's responsibility is broken up into these 3 parts. When it comes to those charged with governance, auditor need to communicate with those charged with governance about matters involving non-compliance with law and regulation. Sometimes a tricky situation may happen that the non-compliance is at the initiation of those charged with governance. And that becomes slightly an awkward position, that when you're discussing with them and they themselves have initiated those non-compliances or violations, how do you handle it? If you are finding it difficult, you will have to take proper legal advice on that matter, depending on the quantum and the gravity of that non-compliances, and depending on your relationship which you have with the client. The second middle section is on the audit report. On the audit report, again, there are 3 subcomponents. One is inadequately reflected in the financial statements. Second is where there is an adequate disclosure and it is properly reflected in the financial statements. And if the sufficient and appropriate audit evidence is not obtained. If the proper evidence is not obtained, obviously you will give a disclaimer of an opinion. you will have to go through the 700 series of audit report. If there is a proper disclosure of the item, including the non-compliance and the rectification and the action taken by the management, along with provision for any fines and penalties on estimated basis, an emphasis of matter may be given by the auditor. Again, you will have to look at how significant is that matter and is it directly related or indirectly related. If there is an inadequately reflected in the financial statements, auditor has no choice to qualify or give an adverse opinion. The third one is also a little bit challenging, where whether you report this to a regulator or not report to a regulator, because there is a client confidentiality which may be a preclude you from making this information, sharing this information with the regulator. But the law will generally override. And for example, in case of frauds, there is a direct reporting which is there under the Companies Act, where if the fraud is beyond 1 crore, the auditor is required to file certain forms with the MCA and report on those frauds. So the other instances, if the senior management is themselves involved in those frauds, then I think it is more advisable that the auditor reports it to the regulator, that those non-compliances. So again, you cannot give a standard answer to all non-compliances, but as auditors, as professionals, we have to use our judgment, we have to use our years of experience, we have to use the background which we have, and accordingly select the action. And if we feel that there is a dilemma or there is a deadlock in terms of our decision making, we will have to seek additional professional help. As Praful sir and Sanjeev sir said, that there are audit clinics which are there. You may approach them that this is a situation, what is the preferred course of action you as an auditor should be taking. And I think they will guide, because there are experts in that panel. So this is broadly what is covered in the standard. The standard is quite exhaustive, and there is a lot of additional and explanatory application and other explanatory material which is also given along with the standard. Let's look at some of the practical other items where this is applicable. So there is standard 315, which is on the understanding the environment in which the company operates, and there also you have to obtain an understanding of the environment in which the company operates to ensure that you are able to understand all the laws which are applicable to that entity while you are doing your audit. The 315 is identifying and assessing the risk of material misstatement through understanding the entity and its environment. There is a reference of 250 in 315 also, so you should keep that at the back of your mind. Reporting non-compliance with those charged with governance is SA 260. So that SA 260 also should be considered while you are reporting or while you are looking at the items of non-compliance under SA 250. Reporting non-compliance in auditor's report, which is a 700 series. So which we saw that it could be either an EOM, adverse remark, or it could be a disclaimer of an opinion if sufficient appropriate evidence has not been provided. There is also a need that you should document whatever you have suspected and identified in respect of non-compliance in terms of audit documentation, which is SA 230. So these are some of the connecting standards 315, 260, 705, and 230, which should be considered while you are finalizing your view on SA 250. The guidance note on CARO, where it talks about CARO 2020, at least at 3 places talks about the SA 250, which is comment on the title deed of the property, legal determination of validity, comment on Benami property held by the company, and timely payment of statutory dues. Besides this, there could be other items also, which may be applicable to either an NBFC or a Nidhi company or otherwise, which should be looked into along with SA 250. The direct reference in guidance note is in these 3 clauses, but I think the principle should be applied at other places wherever applicable. Reporting for fraud, as I mentioned, there is a direct reporting on fraud under the Companies Act if the fraud is beyond 1 crore. And auditor needs to comply with SA 250 with regards to an illegal act. The auditor needs to evaluate the instance of intentional non-compliance and determine whether the same would have a material effect on financial statements. Because when you talk about fraud, it has to be an intentional non-compliance vis-a-vis a non-intentional non-compliance. The auditor may have to consult a lawyer or a counsel to decide the further course of action. Auditor to communicate with those charged with compliances when there is a non-compliance and determine whether to report this item to parties outside the entity or not, which is basically your regulators or any other affected party. Yeah. So this is the guidance note on reporting on frauds, which also talks about considering SA 250 while taking your view on reporting on those items. So coming to the guidance note on IFC, which is internal financial controls, there also what they are saying is that while auditing internal financial controls, the auditor may become aware of a fraud or a possible illegal act. In such circumstances, the auditor must determine his or her responsibility under the Companies Act and SA 240 and 250. 240 is auditor's responsibility relating to fraud in the audit of financial statements, and SA 250 is what we are dealing with, consideration of law and regulations in an audit of financial statement. The next section which we are going to look at is some of the comments which have been received by the regulators on the compliance matters. And this, as I mentioned, we are going to look at the QRB and the NAFRA, what are the reportings which they have done. So if you see, this is the chart which comes in the report of the Quality Review Board, and there are multiple reports which they've issued on an annual basis, and it covers all the standards on auditing, including the SQC1. And if you see on SA 250, there have been 3 non-compliances which they have reported. So this chart is available in the public domain. So we can have a look at what exactly did they point out when they talked about non-compliance. They found out when they did the quality review board that the audit firm had failed to properly document the assessment of the risk of material misstatement by understanding the entity and its environment. So SA 315, which is the predominant standard, they felt that this non-compliance was observed, and the company had also failed to document this, which is one of the requirement under SA 250 of how you have done some of these activities, and because of which the audit firm was obviously asked to rectify that item. The second non-compliance was with regards to not obtaining sufficient and appropriate audit evidence with regards to compliance with provisions of law and regulations having direct effect on material amounts and disclosure in financial statements. So what they found is that the working papers which were there by the audit firm would be deficient in terms of the audit procedure which the auditor would have followed while trying to ascertain compliance with regards to laws and regulations which have a direct effect on material amounts and disclosure in the financial statements. So this was in the year prior to the prior year, which is 2019 and 20. So we have looked at the quality review board's 2 years of comments. Now let's move to NAFRA. And in case of NAFRA, the NBFC was categorized as CIC. CIC is a core investment company, and was of the view that since there are no specific requirements in CIC direction to treat rollover account as restructured account, this is, like extension of a time frame, it is not categorized as substandard asset. Auditor also agreed with this view from the management. And let's now look at, these were the facts of the matter where NAFRA had a comment. And let's look at NAFRA's comment on the right hand side. NBFC master directions were applicable to CIC since CIC direction does not cover treatment of rollover of loan assets. So what they are saying is, because there is no specific direction in CIC, the company and the auditor should have borrowed the principles which are there on the NBFC master circular for rollover of loan assets. Accordingly, NAFRA has stated in their report that the audit firm did not comply with para 18 of SA 250. We will come to what is that para 18 exactly. Wordings we will come to in few seconds in the next slide. The further it says in the same matter, NAFRA has stated that the audit firm has failed to design and perform sufficient and appropriate audit procedure to mitigate the risk associated with the sanction of loan and disbursement of loan during the financial year by the company. The entire documentation was insufficient, inadequate, and largely absent in reference to para 29 of SA 250. We will again go through both these paragraphs, para 18 and para 29 of SA 250. So what does para 18 talk about? It says that if auditor becomes aware of information concerning an instance of non-compliance or suspected non-compliance with laws and regulation, the auditor should obtain an understanding of the nature of the act and the circumstances in which it occurred, and further information to evaluate the possible effect on the financial statements. So what, on the first instance, the NAFRA was of the view that this clause of SA 250 was not conducted, that auditor had not done what is required under para 18 of SA 250. Under para 29, the auditor should document identified or suspected non-compliance with law and regulation and the result of discussion with management, where applicable, those charged with governance and other parties outside the entity. Again, here, the NAFRA was of a view that the documentation which was required was missing, and hence they have pulled up the audit firm in terms of saying that these were potential non-compliances with the standard SA 250. The next point was again on the NBFC. The NBFC had given certain loans to parties which were secured. However, the security was pending to be created, and there was no such remark in the accounts or audit report and the risk involved in it. So security is there, but it is, the charge was not created, and this was not reflected in the financial statements. So the NAFRA is of the view that this is again non-adherence to SA 250. The audit firm failed to check or collect substantive evidence regarding the compliance with legal requirement for creation and registration of a charge as required by SA 250. So if you see the detailing to which NAFRA has gone in terms of ensuring whether the auditor has complied with this standard or not is quite meticulous or in detail, and hence it is very important that as auditors, whatever we do, we document that. We if we have used a judgment, we document that judgment. If we have relied on management or an external expert, we should document that and ensure that the view taken by the management is backed by a proper legal opinion. So that would at least in terms of the auditor making the judgment, they have relied on those experts, unless the expert itself, the opinion is challengeable. Coming to the next section, and which is where I started, as well as Sir had mentioned, that the new code of ethics is there, and certain clauses of this code of ethics have got further deferred, which includes this no-clar as one of the clause, which is responding to no-clar, and there are two sections to it, members in service and members in practice. So this does not apply only to an auditor, but also people who are employed with the company or entities, and to ensure that they are also compliant with the code of ethics and the code of conduct of the institute. This clauses have been deferred now till 30th September 2022, and it will be applicable both to the auditor doing the audit assignment of listed entities and employees of listed entities. So employees of listed entity are termed as PA, which is professional accountant. So this was maybe one area where members who were in profession may not have got guided by SA 250 because they are not signing an audited financial statements as auditors. But now with this code of conduct, they will also come under a similar purview as we saw under SA 250. And let's look at some of the exclusions which are there under the code of conduct. Matters clearly inconsequential. So if there are very trivial matters where its nature and impact is very small or immaterial, you have to use the judgment and you have to say that these will not be covered by the NOCLAR or responding to NOCLAR. Personal misconduct unrelated to the business activity of the client or employer. So if they are on personal front, if there is any misconduct, they will be excluded from the code of ethics or the code of conduct which the member has to follow. Non-compliances other than by client, employer, those charged with governance and management. So this only covers the company, its top management, those charged with governance, and the employer of the chartered accountant who is employed with those listed entities. So all other items are excluded. So if there is a non-compliance by a third party, then that reporting may not be applicable or the compliance may not be required. The broad objective is to comply with the principles of integrity and professional behavior, to alert management, those charged with governance or employer, to rectify, remediate, and mitigate consequences of NOCLAR, and to take further action as appropriate in public interest. Now, as you see, these are very broad statements, and hence the principles which we spoke about while doing the SA 250 detailing, the similar principles should be applied for code of conduct also. So there is an interplay obviously between SA 250 and the NOCLAR. Auditor to assess the financial implications with wider public interest implication, financial or non-financial in case of NOCLAR. Some of the examples which are being given over there of laws and regulations to be complied: fraud, corruption and bribery, money laundering, terrorist financing, proceeds of crime, banking and other financial products, data protection, tax and pension liabilities and payments, environment protection, and public health and safety. So these are just examples. You will not be able to say that non-compliances beyond this will not be covered, and the code of conduct prescribes the responding which a member in industry as well as in practice needs to do when they are able to identify these non-compliances which are direct or indirect in nature. So are we clear till now? Should I go ahead, or do you want to take questions and then go to the case study?
Yes, sir. It is fine, sir. Fine, sir.
Okay. Okay. So let's look at one of the case study which is there. I think some of these case studies have also been picked up from the study material of final CS students. During the course of audit of financial statement, auditor observed that there were contract workers in factory premises who were minor in age. Auditor has communicated to the management about such non-compliances, which does not directly impact the financial statements, and nothing was reported in the audit report. Is the audit procedure adopted by the auditor appropriate? Now, again, most of these questions, you may not always have a correct answer. So, you will have to use the context, the size of the company, whether it is a one-off instance, whether it is a repeated item, whether it is a carry forward item. So you will have to consider a lot of other elements while making your final judgment. But just to give you the answer on this one, obviously the auditor needs to communicate with those charged with governance which it has already done. Additionally, depending on the gravity of the item and the client profile and other cases, the auditor may also suggest that the company should take a legal advice from a labor consultant for ensuring that the terms of and conditions of the contract documents are revalidated and understand all the other implications. It should also, the company should also give a warning signal to the contractor, ensure that this does not get repeated. So what steps have been taken? And considering all those actions which are taken by the management, the auditor would then, and the legal opinion, the auditor would decide whether it is sufficient or not sufficient. Because the laws are different for different countries. So if they have foreign customers, certain countries have very different laws. It also depends on the industry and the sector. So try to be a little more careful before you finally jump to any particular conclusion. Let's look at the second case study. The company is a public company listed on National Stock Exchange. Auditor has identified certain non-compliances which were not material to financial statement, but as management or those charged with governance refrained from taking remedial action. They considered the auditor considered withdrawing from the engagement. Is it justified? So there was a non-compliance, though it was not material on financial statements, but as management were reluctant to take any corrective action, the auditor felt that let me resign from this assignment. And let's look at what is the answer for this particular item. Again, they will have to seek a legal advice for the same. As long as withdrawal is not prohibited by any law or regulation, he may withdraw from the engagement. Because there has been a restriction now that if you have done certain quarters, you cannot resign in the last quarter as an auditor of a listed company, which is what happened during, if you remember, Manpasand Beverages, where the auditor suddenly resigned, and after that institute came up with an announcement, that the withdrawal, sudden withdrawal would keep put the client also in a difficulty, and hence you cannot resign after you have done the audit for the first 3 quarters. So that is where even under the A18 of SA 250, A18 is basically, as I said, the para on application and practical guide and the further guidance provided. It says that if withdrawal from engagement is prohibited, the auditor may consider alternative action, including describing the non-compliance in other matter paragraph in the auditor's report. So if you are not able to resign because there is a prohibition, you should in your audit report other matters clearly state that fact and explain the reason why you wanted to resign, but the law prohibits you from resigning. So this was again the second case study. Let's go forward to the third case study. Company got a show cause notice from State Pollution Control Board. This was not informed to the auditor and also not covered in legal case register, but was mentioned in brief in the minutes of the board meeting. What should the auditor approach for such matters? Let's look at the probable answer. Obviously, the show cause notice, you should obtain a copy for it. Inquire the current status from the legal team and ask them to estimate if any outflow is expected to regularize the non-compliance, like penalties or fines or late fees or compounding fees, and include this matter in contingent liability, because this would be reflected as a contingent liability if the company is of the view that the items noticed by the State Pollution Board are contentious or they are contending it. But if they have accepted it, then a provision for all the financial implication and the fact that they are going to submit an application for condonation or compounding should be mentioned in the financial statements. During the year, there is a rise in the volume of transactions with related parties, and new related parties were also added. In such a scenario, what additional audit step needs to be taken by the auditors. So in a related party, one of the most important thing is that is it at arm's length or not, and whether there is a documentation to say that the prices which have been agreed or the terms which have been agreed with the other party, whether they are the same as with unrelated party, and they have been approved by either the audit committee and the board of directors. And in case there is a shareholder approval required, whether it is being sought at the ensuing AGM, then that fact should also be mentioned in the audit report. Look at disclosure of related party relationship, transaction and closing balances in the financial statement. So try to find out that if these are new transactions or the volume has increased, what is the reason? How was this done in the previous year? So if you understand the basis on which the transaction volumes have increased, that may give you a little more insight in terms of how to handle these items. The last case study from, I think, is on the non-corporate entity, which was not registered under the GST Act, though it crossed the threshold limit. The threshold limit, I think, is 20 lakhs. The management says that since they are not registered, there is no default and hence the auditor cannot comment on it. What is the right course of action by the auditor? So here clearly there is a threshold which has been crossed and that triggers the requirement for a registration. And the fact that they are not registered itself is a non-compliance. And to say that because they are not registered, there is no default is definitely not acceptable as an auditor. So auditor needs to issue a qualified audit opinion, audit report, as well as cover it in the tax audit report. The auditor should try to convince the client to ensure that registration is now taken. If required, if there is a GST expert with the audit firm, they should also take internal advice of that GST partner in terms of what are the remedial actions which are possible. Yeah. Some of the myths which are there, that SA 250 is not applicable to limited review of financial results, that's interim account. False. It is covered under SRE 2400 and 2410 series, and this includes the principles of SA 250 also. So I don't think there is an exemption which is available for limited review. SA 250 is applicable to certificates or report issued as special purpose. False. This is covered in the guidance note on report. Also, such reports are not for the audit of financial statements. However, the broad principles are to be applied. So this also needs to be covered when you are looking at any certificate. And if you come across anything, the principles will be broadly applied. In case of joint audit, the area of applicability of laws. But on the second point, the code of conduct would cover little more than the audit, because at two places there is some clarification which is pending, whether it applies only to audit or does it even apply to other than any other attestation function. In my view, it is always better to consider it for all the attestation function per se. In case of joint audit, this area of applicability of law and regulation cannot be divided, and it is a joint responsibility of auditors. Again, the work allocation needs to be carried out at the start of the audit and duly communicated to the client. Further, in case of material non-compliance, it needs to be shared and discussed with the joint auditor. So both the last two answers have a true and a false, both elements into it, though they may strictly be false, but from a practical perspective, I think they need to be complied with. There is a detailed checklist which is detailed, or a brief checklist which is available, which is a sample checklist for standard on auditing issued by ICI, and the link is already here. When I share the file, which can be shared with the participants, you will be able to access this checklist also. The checklist has various steps and various procedures which the auditor should follow while doing the audit to ensure compliance with SA 250. If I was to sum up the standard on auditing was always existent. The auditors were always required to ensure that they are careful about other non-compliances, but the gravity and the limelight to this topic has gained momentum over the last few years. There is more strict regulations are in force and responsibilities cast on professionals. They cannot turn a blind eye to non-compliances. They need to deal with the non-compliances which they observe while doing their audit. Because otherwise they will be held responsible at a later stage that if you were aware about it, why did you not deal with that non-compliance appropriately? The auditor should proactively, for large companies and listed companies, suggest that the management to introduce a compliance tracker and a compliance software. There are various softwares and compliance trackers which are available, and this is a combination of using of technology and the legal knowledge to ensure that all the laws are complied with. It also has a lot of declaration, self-certification, and this overall will help the organization ensure that the responsibility for various compliances is not on one single person but is distributed in a organized manner. Because at a factory level, the factory in charge will have to ensure the compliance, and based on that factory in charge's compliance, the compliance officer at the head office would in turn issue his certification. So it is breaking down the compliance into smaller components, making different people responsible for each compliance, and then in a pyramid structure bringing it to the top. Internal financial controls or internal controls on financial reporting and the whistleblower policy needs to be very, very strong, so that any items which are out of usual, they are highlighted, there is action taken on it, the root cause is identified, and if it is an awareness issue, if it is a knowledge issue about the law, then that is by training programs that is spread so as to ensure compliances. The emphasis of internal auditor cannot be ruled out, or cannot be not considered. The internal auditor needs to play a very, very active role in ensuring the compliance with the various laws. They are system and process people. They should go in detail on the various steps the management has taken to ensure compliances and see whether the controls which are installed, are they proper, are they working properly, and is the outcome of the control correctly dealt with. So that is it from my side on the presentation. And I would be glad to answer any particular questions which various people may have on this topic. As I said, this is, if you are in audit profession, this is a topic which you cannot ignore. It may be slightly difficult to address at times, where you may have to seek help. You may have to seek help of your network of other audit professionals to see how they have dealt with a similar situation. But remaining silent and not taking any action on account of non-compliance or not identifying non-compliances is not an answer which is acceptable. Anil, from my side, I have covered whatever I had. Maybe we are slightly early, so we can take the questions. Anil, you are there?
Yes, sir.
Yeah. So from my side, I have covered all the aspects of the topic which was there today. If there are any questions or if anybody wants to share anything particular, we can take that.
Yes, sir. I have 2-3 questions, sir.
Yes.
Yes, sir. Give me a moment, sir.
Yeah, sure.
So first question is relating to so member is asking, in case of NOCLAR, members are not in control of decision making, and they can point out either in writing or verbally in discussion the shortfalls of the compliances and consequences. But it is for the decision maker to do the compliance or not. In such situation, how members save himself?
So that is where this code of conduct has got deferred twice, thrice, and if there is, it's a very important item and is not in public interest, I think the member has would definitely need to report it, and if they are not comfortable, they will have to resign from their position in industry so that they are not part of those non-compliances.
Yes, sir. Sir, how exactly the SA 250 and NOCLAR interplay with each other?
So, as I said, the SA 250 is a guidance which is there to the auditors for audit of financial statements, whereas NOCLAR is much broader because it is code of conduct and it applies both to auditors as well as the members in industry. And in all probability, the NOCLAR is a little more broader because the unlisted entities or attestation function per se may get covered, so that clarity is still to emerge. But today the members per se may not be guided by this NOCLAR till the time code of conduct is implemented. So that is the interplay, and the members in industry can also draw the reference of what is required from SA 250, that they may report it to those charged with governance. And then if those charged with governance themselves are involved, they will have to seek their legal view from their individual perspective, that what is the action they should take.
Sir, where NOCLAR would help the members in practice and members in the service?
It would help. It would help to the extent that they will have more powers. They will be able to convince the management that why rectification should be done and why they will not be able to be a part of certain wrongdoings. So over a period, yes, it will help because it will bring a little more credibility to the overall profession, to say that members in industry are also going by the ethical path, and if there is a non-compliance, they are trying to push their influence to ensure compliance, or if there is a non-compliance, they are able to put their foot down.
Yes, sir. Sir, one member is asking about this labor laws. One member is asking, would you enlighten us with respect to the non-compliance under the labor laws, which usually do not materially impact the financial statement. However, there is a still non-compliance as far as the company is concerned. So can you enlighten on this, sir?
Yeah. So see, there has been a plethora of information on the compliance with law, because even this Narendra Modi government tried to simplify certain laws and reduce certain laws. Labor laws, as I understand, also has a lot of small elements which need to be complied with, and some of these are really very cumbersome or tedious in nature. Again, as a management, if the intent is to broadly comply with, and as auditors you observe that these non-compliances are more procedural in nature and it does not impact anybody adversely, so there is no prejudicial impact to any of the stakeholders, then they may be able to take a little more liberal view, and if it is something which is fundamental, then
yes,
then obviously this needs to be addressed in a proper manner. But again, you will have to use your judgment. It's like saying that is breaking a traffic signal a large non-compliance, or is it a small non-compliance? So a non-compliance is a non-compliance principally, but nonetheless you will have to use your judgment.
So one member is asking, can you please guide and give a gist how to report or handle labor-related non-compliance in the audit report?
So let's say if there is a labor non-compliance, for example, let's take an example that there are beyond certain number of employees, and the company needs to provide for facility for women employees so that their children can come and have the stay during the work time, and the company has not complied with it. Then what you will do is you will try to discuss with the management. They will share, are they going to make an effort? Are they having a tie-up with any other daycare institute, so that as an alternative, at least in spirit, the law is being abided by. So you will try to look at and try to ensure that is the management not wanting to comply, or is it very difficult for them to comply? The moment you decide that there is an intention to comply and there is no intention not to comply, then you will try to find out a solution. You will try to look at the alternative arrangement. Let's say if it is a pure non-compliance, it was required, it is possible, and they have not done it. then you will ask for an action plan from the management. You will present it to the board of directors and maybe leave it with that. If the board says that they will rectify it, if you feel that the board is saying that no, we do not want to comply with it, as auditors, you have two options: either to report or you will have to resign from the engagement. So if you report, you will have to again look at what is the financial implication for that item and whether that financial implication needs a provision or not, and that non-compliance, whether uh, any cause notices have been received from by the labor commissioner or the labor officer, and how is it being dealt with.
Yes, sir.
Unless you have the complete context saying that all labor compliances be qualified or emphasis of matter or cover it by way of a note or a representation, it's not an easy answer to provide.
Sir, if reporting on internal financial control under section 143 of the Companies Act is required by the auditor.
Sorry, can you come back on the question?
Sir, reporting on IFCs under section 143 of Companies Act is required by the auditor.
Yeah, it is required. It's a part. There's a report which is to be issued by the auditor on the internal financial controls, adequacy of internal financial controls. I do not know the exact section. What does that section talk about? But the auditors, statutory auditors, need to report on the internal financial controls on financial reporting.
Okay, sir. Sir, if management is not willing to accept the non-compliance pointed out by the auditor, what is the next step auditor should do in this case?
So let's take an example. According to the company, GST is applicable and the company says GST is not applicable. Then you go to somebody who is a GST expert, take the opinion of the GST expert. One way or the other, one of the party will have to get convinced by the opinion and by the rationale and the logic which is used by the person who is an expert, whether GST is applicable or not applicable. And based on that, the final decision will have to be taken. So I think if there is a deadlock in terms of a decision between the management and the company, the answer would be to go to a third person who is an expert on that particular topic and try to resolve it with that answer from the expert.
Yes, sir. Yes, sir. Yes, sir. Sir, one last question relating to this. Member is asking, can you please guide all our members while auditing how to tackle and how to take into account the SA 250 while auditing the books of accounts?
Yeah. So my suggestion, and this is where I think regulators are very clear, you need to understand the overall what are the controls which the company has to ensure compliance with law. So let's say if it's a factory, there are 16, 17, 18, 20 laws which are applicable to a factory, a Boiler Act and maybe a Factories Act and some of the Pollution Control Act. So how does the company per se also ensure the compliance with that law? You need to go through that. You need to look at the documentation. You need to look at the process. You need to look at the controls. You need to look at the people who are responsible for those compliances. What steps have they taken? And based on that, what is the outcome? You will have to go through the checklist which the institute has devised and try to cover those audit procedures which I just now mentioned in terms of understanding the systems and processes which are installed by the management. You can look at the internal audit report. You can ask the internal auditor to do a special review on some of the items if you feel that there are non-compliances or you suspect there could be non-compliances. You look at how management or the audit committee is dealing with those items of non-compliance in their minutes or the discussion. And based on that, you will have to suitably modify your audit plan and accordingly report to those charged with governance.
Sir, thank you so much for your... Yes, sir. Yes, sir.
There is no shortcut for compliance. I think it is a large responsibility. It is an onerous obligation which is casted on us as chartered accountants and auditors, and we cannot say that it is difficult or time consuming and hence we will not do it. We will have to comply with it. Whatever support which we require from the management will have to provide. If first year of audit you feel that there are a lot of areas where management needs to improve, you will have to ensure that by second year you have those things in place so that your position is not jeopardized and you are not held responsible for something which otherwise the management or the company is expected to do.
Yes, sir. Yes, sir. Thank you so much, sir, for your words of wisdom. You have explained in a very lucid manner, and we have gained a lot through your deliberation on SA 250. And thank you so much on behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India for sparing your valuable time and enlighten all of us on various intricacies and technical aspects in SA 250. Thank you so much, sir.
Thank you, Anil, and thank you. And I was, thinking that if Vishal Bhai was there, he also has vast experience on this topic. And
Yes, sir. Yes, sir. Unfortunately, he is traveling. He is in flight right now, sir. So
Yeah,
some urgent meeting arisen. So that was he. That's why he is in the flight only, sir.
yeah, and
Yes.
as Singal sir and Praful sir mentioned that these audit clinics are there. So try to use those audit clinics. Uh, try to if there is a difficult situation, try to look at how other auditors of listed companies have handled those non-compliances, and that's an area which can help you make your own judgment of how you should deal with some of these aspects.
Yes, sir. Yes,
The
yes, sir.
transparency and disclosure is one principle. If you follow in terms of this standard, it will go a long way. If you are able to convince the management to ensure that the systems and processes are robust, if you are able to look at certification done at various levels, checklists which are used for compliances, various experts which are employed by the management to ensure compliances and their reports. So for example, you have company secretary. The company secretary will give a report in terms of the various compliances with the Companies Act or the secretarial procedures. Same way, you will have a cost auditor which will talk about the cost audit report.
Yes, sir.
You may have a different tax auditor who will talk about the ICDS and the tax compliances. Because TDS returns and the delay in payment of TDS is something which needs to be reported there. So auditor will also have to rely on all these experts which are there. You will have a transfer pricing auditor. You may have some of the other certifications which are done for foreign payments. So if the auditor is able to look at all that and based on that make a judgment whether the compliances are met or not met.
Yes, sir. Thank you, sir. Thank you so much, sir. Thank you so much for your expert advice, and thank you so much for your experience. Thank you, sir. Thank you on behalf of SSP of ICS, sir.
Thank you, Anil. Thank you,
Thank you,
everybody.
sir. Thank you, sir. Namaste.